Welcome back, investors, to Ticker Time News. I'm Adam. In Columbia Sportswear, ticker symbol COLM, is a company that I'm adding to my value stocks watch list, and you could too. There are many reasons to like this apparel, footwear, accessories, and equipment brand that focuses on outdoor and active lifestyles. The stock is trading lower following the company's Q1 earnings report. The headline numbers for Q1 featured strong upside EPS. Revenue grew at 22% year over year to a record $761.5 million compared to Q1 a year ago. But that resulted in a slight miss. But Columbia did up its full year EPS guidance. Full year revenue remained the same at $3.61 to $3.69 billion. Columbia credited its results to strong consumer demand and shipments of higher spring 22 orders. It has benefited from growth across all of its brands, channels, and geographies. Columbia stated that its footwear brand is seeing phenomenal demand. Those results may bode well for Lululemon's entrance into the footwear world. Columbia's CEO said that their strong financial performance validates their strategies and demonstrates that their brands are resonating with consumers. Nothing is jumping out at me as a red flag to explain the pullback in the share price from earnings. The sales numbers could perhaps have been a bit stronger, but revenue barely missed. Also, flat year-over-year sales for China in Q1 and underperformance in other countries could fuel concerns about the Q2 outlook. However, regional COVID lockdowns explain why those sales were weak, implying that underperformance there is a temporary setback. Gross margin did decrease to 49.7% from 51.4% last year, but I'm not overly concerned about that one either. Columbia has caught my attention in recent months because its stock has been pulling back, creating what I view as a nice risk reward profile. Now, two attributes jump out. First, Columbia has been aggressive in terms of share buybacks. During Q1, Columbia repurchased $217 million of its stock, representing a 4% reduction in shares outstanding. For the company to buy up 4% in one quarter shows me that management thinks its stock is just too cheap. Columbia also did a $500 million increase to the company's share repurchase authorization. So there's more buybacks to come. Second, its balance sheet remains rock solid. With cash and investments of $610 million or $9.45 per share, no long-term debt, and no bank borrowing. Overall, I like this risk reward for a quality brand like Columbia. Supply chain issues are a concern, and I will want to see sales in China improve after this year. However, I am partial to companies with strong balance sheets and aggressive buybacks, and Columbia checks both boxes. Plus, it's got a dividend of 30 cents per share, and it's got a PE of just 14.2 times at the midpoint of guidance. The stock could face near-term downside risk, so I wouldn't jump in just yet. I'd want to see the stock stabilize before buying. That's why I'm adding Columbia to my value stocks watch list, and you could too. What value stocks are you watching right now? Let me know in the comments below, as your comments help us all to better understand. Help us out by smashing that like button, sharing this video wherever you can, and joining us in beating this market by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.